Good morning, I'm Michael Bloom, Hedgeye's president, sitting in for Daryl Jones. Welcome to the Macro Show. It's February 29th, 2024, leap year day. 60th day of the year, 306 days to go. If it's your birthday today, I have a couple friends who have a February 29th birthday. Everyone at Hedgeye here wishes you a very happy birthday. We know there's a special day because it only comes around every so often. With that, we'll turn it over to you.
I like that. I thought with that, that interlude of the Hedgeye Live, I was going to start dancing a little bit.
Yeah.
Yeah, I might pull it out this year at the dance. Depends on what kind of dance party you create.
There might be a dance for this year.
Yeah,
there was a lot of dancing last year.
At a recent dance party, I did the splits.
Ooh.
Now, I was told by a goalie mom, of all people, and you know when I'm at a good party, I was told by a goalie mom, well, did you know that especially young men, it's only goalies who can do the splits? And I'm like, really? So I'm not going to say the next day was, my hamstring was feeling great, but I did the splits.
Wow.
I got some looks. I mean,
that means you got some flexibility at your age.
There's a little bit,
That's
I can, kind of you don't actually, many of you did not, for those of you that are signed up here for the free access week, you don't want to see me dance. Let's go. Top three things this morning in the notebook. Number one, getting along China. Of course, they're not going to be talking about that on CNBC. They're going to be talking, well, actually, I don't even, will they actually hold themselves to account to all the bag holders they have in Snowflake stock right now? Who knows? Who cares? I mean, this is just a better way. China, commodities, and the VIX. Let's go. First on China, this is a huge move. Now, it's the particular thing that happens at the particular point in cycle time. Now, if you have not read this book, this is my Bible, okay? This is the Fractal Bible of markets. Now, if you have no idea about this, this is why you probably get offended if I call you a moving monkey. A simple moving monkey, a one-factor model, right? Now, it's not the average of things. It's not the multiple of things. It's not the boiler room broker breakdown of an idea that's bullshit. Again, it's the particular thing, the particular market move that happens at the particular point in the cycle time. Now, as you can see in our long-standing nowcast now, we've been bearish on the Chinese slowdown for a couple of years. We had the bottom in the first quarter. Now, as Michael, in addition to the leap year, you're going to move to the new month. We're going to be in March. And we had the Chinese economy bottoming at this particular point in cycle time. The data couldn't have been worse. And now you get a breakout in Chinese stocks. We call that a phase transition. So again, anybody who's well-oriented with chaos theory, complexity theory, fractal math understands what a phase transition is. And again, you go from bearish, resoundingly bearish, one of the best shorts we've ever had, the Chinese recession, to bullish. So yesterday in Portfolio Solutions, and no, I didn't put it in real-time alerts, and if you want to cry to your mommy about that's okay. You'll get over it. Because it wasn't quite at the low end of the range, FXI, which I added to our asset allocation model. I was waiting on it. You knew that. Could have done it for yourself, and when you saw it in the Portfolio Solutions, you would have done it. I also added KEMX, which is, again, Asia ex-China. So we got plenty of exposure. We're along India, we're along the Philippines, we're along South Korea, and now we're along China. So again, this is a very good setup with easy comparisons or quads going into quad 1 and 2 from here. And China up 1.9% overnight in kind is that particular move that I'm talking about. Point number 2 this morning, commodities. Now, if the U.S. economy is set to reaccelerate in the month of May. And again, this morning's PCE data, by the way, right in line with what we thought. And by the way, what we thought was higher, and then the street took up their numbers. Now it's better than expected. Do the splits. Whatever. Yeah, we're already set up for this. I'll get to that in a second. But commodities. Let's say that we're coming out of a German industrial recession, a U.S. manufacturing recession, a broad depression in the Russell 2000, and we're going to get some demand picking up. Well, the oil signal that we've had that's bullish, obviously it's not new as of this morning. We're long copper, not new as of this morning. It's up. Everything from gallium to nickel up 7% in a month is moving now. Craft pulp, can we see the things that we're measuring and mapping? Can you imagine you're like just one of these moon dogs? Luna tattoo at 75 cents. You're sitting there like, come on, Luna, go. Moon for me into the month end. Now, they're not measuring and mapping everything. It's much harder to do this job than to push a coin, right? A fraudster to push a coin. Now, this is what we got. We got a breakout in commodities. So that's great because from a monthly quad perspective, while January, the data, again, you didn't just get PCE on inflation. You actually got the personal consumption expenditure number, which slowed materially against a tough comp. So again, monthly quad 4 was January, albeit narrow, and we're going to a quad 3 in March. and then to a quad 2 by the month of May, and then we're going to stick up there with some big quad 2s, which means you have the rate of change of growth and inflation globally picking up at the same time. So that's great. Quad 2, there's a lot of longs to be long. Now, finally, the setup on the VIX couldn't have been better. Now, look at this calendar where I put an arrow right there. Right there. All right? So you see, that's where they priced it. But if you went back to the macro show for the last week, I said, look, that what we call very short-term calendar volatility was at 10, 11, and again, they priced that up at 13. Because it's like, whoa, what if it's even hotter than expected because all these Wall Street economists are now taking up their numbers? Well, it was right in line with the number. Ooh, in an election year, right? We're not going to go there. What we're going to do is say that the event risk was priced in, and now the volatility curve, which was already flattening from that point, gets you to where you're at. I have 6 longs in real-time alerts, only 2 shorts for a reason. Again, and the S&P 500 has been down for 2 of the last 3 days, just FYI too. So again, plenty to do out there, but again, I think that this thing was well priced. Again, we have a lot of macro tourists out there who have absolutely no idea what I just said about short-term volatility being priced into the calendar on PCE, but they know everything about PCE and the snowflake. How many of them are long the snowflake? That's embarrassing. Those are your top 3 things, right? Here's a great quote. This, you see how many dog ears are in that book?
It's your favorite book.
Yeah, it's a lot of dog ears. A lot of stuff in this book. Like this copy. If any of my haters burn my house down, this would be the thing that I'd miss the most. This one. It's got wine in it, beer in it. It's got my cigars. You know, like I've read this thing so many times. I can pick almost any page here on things that I've underlined and just like fall in love all over again. Yeah, I don't love tickers. I love my wife and I love this book. I love my kids. I love this book. The genius of, do you know what fractals are? Look it up. You have ChatGPT now. Everybody can look up anything. The genius of fractal analysis is that the same risk factors, the same formula apply to a day, as to a year, as to an hour, as to a month. Only the magnitude differs, not the proportions. In fractal analysis, a price series is like a long folding car antenna. That's awesome. Now, it's hard for people to apply, or more people would understand this. You can be rest assured we've applied it. You know, markets like everything else in nature are fractal, okay? The contours of an ocean line, the edges of a leaf, the behavior of humans, okay? And it gets augmented now with very short-term options in the machine's flows. And that's the game we're in. This is a super exciting thing. So if you're gone as of tomorrow, which is the end of free access week, do yourself and your family a favor. It's probably not going to be an easy read. It's a lot easier to look up on Yahoo Finance a 50-day moving monkey. It's a lot easier to say, to rant garrulously like, you know, Charlie Brown's teacher or Stephanie Link on Snowflake. No model, just thoughts, right? Useless thoughts, okay? Get better. Get better. You like this book?
Love the book.
Yeah, there you go. There you go. A little motivation for people, right? You just want to get better. Everybody wants the shortcut, but that's not going to get you to where you want to be, all right? S&P 500. That's why a lot of people are so infatuated with this move in crypto. They're just, a lot of them are just kind of like trying to get back to break even, to be clear. But yeah, we minded our own business. We went bearish on crypto and related Bitcoin and related crypto. Don't call that crypto too, or they might get triggered. At the end of 2021, went bullish in October of 2023, and here we are, mooning. Great. S&P 500 risk range, 49.66. So internally, that's a higher low, again. So we have a big higher low at the low end of the range. The top end of the range was implying that we're going to see an all-time high. This would not surprise me whatsoever going into the weekend. All the event risk on PCE is gone. Okay, so that's gone off the calendar. Tomorrow's a new day. 51.30. The other thing that was really important was that the flip line for gamma was 50.60. So 50.60, and the S&P closed at 50.69. So now we're back. We're clearly in a positive gamma situation. Positive gamma doesn't mean that you go moon. It just means that you didn't flip below it and have negative gamma where the selling would beget selling. So it's like kind of walking to the edge of a dock, and your friend's there, and he could push you in, and you're wearing a suit. Why are you wearing a suit near the edge of a dock? I don't know. I'm making the story up as I go. but you're standing at the edge of the dock, and you're like, shit, my buddy's going to push me in. That's the flip line. And then all of a sudden, his wife calls him back. Oh, then you're fine. Stand there with your suit at a wedding by the dock, right? Otherwise, you'd be wet in the suit. Now let's think if we're at a wedding, that's a problem, right? So this is the whole thing, right? Dealers deal, I don't know, is that okay, Gendron? Did that make sense? Trying to articulate what gamma is to a monkey is extremely difficult, all right? Is that all right?
I'm that monkey. I don't know what you're talking about with gamma.
Yeah, but
different audience.
The dock. I think I'll come back.
I like the dock. That was a good one.
Well, I don't know. I got to try different things. The art of coaching is actually knowing exactly what's going on and what to do with it, but explaining it to everybody else so that they can understand it. Being a player to me is far easier than being a coach. All right, but I'm trying. I'm just trying. Just trying. All right, trying to get better. What else we got going on for you this morning? Now, here's another beautiful line. VXN under 1775. Do you know what this is? VXN. Do you know what the VIX is? Yeah, you know what the VIX is. This is NASDAQ volatility. Now, I bought more Qs yesterday. NASDAQ, right? So what I saw was the potential for this to break down through immediate term trade support. Now that, because you've had, people get nervous when instead of MAG 7, you go to MAG 5, then to MAG 4 on the Google breakdown. So they're like, shit, I got to start hedging my Qs position. And then there's a little bit more volatility, and then you get this PCE priced into some volatility. So volatility was relatively elevated here. But what if that were to go to 13 or 14 or 15? You'll get an all-time high in the NASDAQ. And guess what's the top end of the range implying on my NASDAQ Composite Index? 16,205. And the all-time closing high, which has not yet been eclipsed, is 16,057. Okay? So higher highs beget higher highs. So I'm bullish on that too. What else we got going on for you? Oh, I'm bullish and you don't want that? Because you're a free access week and you're like, oh, that guy. Get over yourself. Yeah, go back to sleep. Do whatever you're doing down in a van down by the river, right? It's okay. All we care about is the next play and what's in our account, right? So last week was a great buying opportunity in growth, IWO, Qs. We did all that on red, right? Now we sell some on green. Right, what else we got going on for you this morning? What else? Sorry, hit on the calendar. High yield has gone to bullish trend as well. That's not new this morning, but just to reiterate that. So look on your pin sheet. The risk ranges are they free this week too?
I'm not actually 100% sure.
Gendron would know. I made a mistake yesterday. I said that real-time alerts were free, but they weren't. I screw things up all the time. But if the risk ranges are free, then may they be free. All right. If they're not, the people that pay for those see every day what is bullish trade or what is bullish trend or bearish trend. So copper is a new bullish trend. So those are the things that could go up more, right? Because the Nasdaq's been bullish trend for a long time. So again, S&P Momentum, which is another big long of mine, SPMO. That's in your risk range product. Insurance stocks, IAK. Did you see Warren Buffett's quarter? He couldn't even hide how much money insurance companies are making off your asses. Oh yeah, it's inflation. It's a great way to play inflation. So when the government says there's no inflation, and Buffett's making another pile over here on charging your premiums, there's only one way to get your own boat, right? Got to buy me a boat, get a pile like Warren Buffett, buy his insurance stocks, right? That's what we're along. IAK, KBWP, you got it. IAK's in the risk range product as well. Has been for quite some time. We bought India yesterday now, and it was up overnight. Nice. We bought Philippines for the last 2 days, and it was up a percent. EPHE. That's nice. That's really nice. We sold some South Korea yesterday in real-time alerts and otherwise, and it was down overnight. This is nice. This is the way that we do. Sell some on green, buy some on red, rinse and repeat. I don't know why it's so controversial personally, but I'll let people get over themselves on that. Europe, look at this chart of Germany. Now, Michael Bloom, is German. So this is why this chart is going vertical, because he's here today. Okay, now, what's fascinating about this is that the German economic data this morning could not be worse. All right, they reported a retail sales number on a year-over-year basis of negative 1.5%. 1.4%. They've been in a recession. They reported an unemployment rate, not the U.S. unemployment rate, something that's around inside of 4, of almost 6%, right? Highest level since the pandemic. So their economy has been in a recession, but the market's saying they're coming out of a recession. So this is a good example of the machine saying, I saw your recession, McFly, that Hedgeye called it in Germany back at the beginning of 2022, right? Remember how much money we made on the short side? Then the signal flipped back to bullish. I'm like, wow, that's weird. The data is really bad, and the comps are still bad till the first quarter. And they have been, but the market is essentially saying, I don't care. I'm going to move to the recovery in Germany, which is, again, this thing's absolutely ripping. It would have been better to be long Germany than Spy Monkey, right? Now we'll see how Spy Monkey does today, but I digress. We're long Dutch stocks, Swedish stocks, as you know. A little bit of a pullback earlier this morning. I don't think that's happening anymore, but I've thought wrong before. What else we got? Already hit on commodities, broadly broadening that. We're not long every single commodity. In the book, the dude took mainframe IBM computers to measure and map the daily, hourly price movements. You remember how it's about that antenna, folding it out and bringing it back in? You're going to get there trying to model it yourself. Now, if you don't model anything, like Drawdown Josh Brown or Stephanie Link, then fine. Just talk, right? But if you do model things, now, this is key. You're going to find that you're not all commodities are the same. Now, we covered some wheat yesterday, and now it's up. So there's another good example of just trading around wheat. So we're getting longer of commodities on this side, but we have some shorts still over on that side. The three that have really worked the best are HYDR, hydrogen, and all the bullshit stories from Wall Street associated or the green climate people on that, wheat and corn. We'll see if those things turn bullish. Wow, we're going to have quite a ride. Now, we've been short deer stock alongside ag. So again, these things have been our positions, just to remind people that haven't been part of our community, and may not be from now on, but we're not going to forget these positions because they're in our accounts. What else we got going on? Bond yields, 419. That's a big higher low on the 10-year yield. So no matter what happens today on the 10-year yield, what I care about is this number here, 419 to 438. So you'll note that you got up to like 431, 432 on the fear, and this is what I said, the bond market was already pricing in fear of a higher than expected inflation component of the PCE, and it ended up being in line because it's just in line with numbers that they took up into the number. Got it? Okay, good. And it was priced into, of course, short-term equity vol, which we already highlighted. Bitcoin, top end of the range. This is unbelievable. This is fun. I mean, this is fractal math in all of its glory. The top end of my range is now 64,144. Right? 64,000. Now, that's something. Another line from the fractal gods. The price variations scale with time. This is going all fractal on their ass. This is great. They're not going to ever like us.
You should love our
The
Bitcoin
amount
trend
of
tracker
tweets
product.
that people apparently, I'm one of the guys that said sell some Bitcoin accurately. So they'll never forget. And they don't know. These are some of the dumbest people to ever tweet. Yeah, that's okay.
Well, they're not managing money, right? They want to get rich.
Right.
Which is very different from what it is we're trying to teach people here at Hedgeye. We're trying to teach you how to preserve and protect and grow with the market.
Yeah.
And if they have the stomach for that kind of volatility to lose 75% of their net worth when the thing doesn't work, God forbid there's a scam involved, it's just, I guess, a different way to live.
There were those things too, right? There were all the frauds
Yeah.
and scams and lies and blackmailings and deaths.
Yep.
And they're all signed up for that, like it never happened.
Yep.
Now, how many kids do you have?
I've got 3.
3. Now, what if you went to Tatiana and said, hey, look, it's been a tough start to the year. You remember, what we were worth into the end of last year? It's 2021. We're down, our net worth's down about 80%. Would that change things at home?
Look, there is a small but growing Hedgeye Nation community that wants to know about my FX trades. I was going to ask you some questions about that later on.
Okay, good.
But I don't whip it around the way I used to like a decade ago. I mean, you remember that.
Yeah.
That was pre-kids. It's just different, right? So,
yeah.
Yeah.
It's different. Now, if you just made another pile like Warren Buffett in crypto like we just did, then preserve and protect it this time. I mean, come on. It's month end, the top end of the range if you see it, and it has jump conditions. I mean, the whole point about building the model this way is that you'd have an extreme level of arrogance to tell the price of something what to do when it goes nonlinear. Right? So I just sit there and watch it. Right? Yeah, it went to 64,144 today. Okay, I believe that because I believe the risk range.
Yep.
All right, what do we got?
All right, I got some questions for you, but before we do that, I want to talk about Hedgeye Live. We're just over 2 months away, and this is, of course, the biggest gathering of Hedgeye Nation every year here in Greenwich, Connecticut, May 2nd through 5th. Tickets are available at hedgeyelive.com. I think we only have about 30 tickets or so in this phase left, so time to grab them up. We have a wonderful program, a couple of new things going on. We're going to have one breakout session that I'm really looking forward to because we're going to talk about private markets. It's going to be led by David Salem, our capital allocations analyst. This is obviously something new to Hedgeye. Really awesome. Our main sponsor is going to be Simplify, who will be our platinum partner this time. Really great to have Simplify Asset Management involved. There's a wonderful breakout session, which I'm really looking forward to. I was on the phone with Mike Taylor a couple weeks ago, and Mike says to me, you know, Michael, as an active portfolio manager, Mike Green, I've talked to him so many times, he's a really good friend of mine. I have no idea what he does. I said to Mike, that's our breakout session right there. We're going to have an active portfolio manager and a passive manager in a conversation explaining to each other what they actually do and how it's different. I think it's going to be one of the real highlights. I'm not ready to announce the guest yet, but we are working on a debt discussion that you're going to lead in the big plenary session. An awesome guest who knows the federal budget inside and out, who we're expecting for that. It's going to be one of the real highlights. We have Steph Pomboy of Macro Mavens who's going to be joining us, Danielle DiMartino Booth, Dr. Gio Valiante, who last year when he was on for a real conversation was a real audience favorite. I know a lot of you asked to meet him in person. You're going to have that opportunity in May at Hedgeye Live.
Yeah, we keep the numbers small so that you can interact. Not only, I mean, I'm probably the last person you want to interact with when all those people.
You have a lot of competition at that conference.
Yeah, and I'm okay with it.
Yeah.
So now if I do the splits, I might get a new crowd.
Unfortunately, there are expectations now for a great party, but I hope I'm going to be able to deliver for that again on Saturday evening. We've got the sector breakout dinners. Our friends at Wines Till Sold Out, WTSO.com, are going to be sponsoring the welcome cocktail again. There's going to be a great wine tasting involved with that. So I'm really excited about the program. The team here is really getting ramped up for this, and we hope to see you all May 2nd to 5th, Hedgeye Live here in Stamford and Greenwich, Connecticut. Get your tickets at hedgeyelive.com.
I like it.
Before my question, I would love to hear from Hedgeye Nation on this insurance inflation question, because I've met with a lot of business owners in the last 2 months, and almost every conversation turns to how everyone is getting absolutely squeezed with insurance premiums, whether it's in their personal life. There was a guy I was talking to recently. He has a house in California. The house is worth about $2 million. He found one insurance company that was willing to sell him homeowners insurance. His premium, you're not going to believe this. I almost fell off my chair. $30,000.
Wow.
For a $2 million house. I just got our numbers here from our carrier for healthcare premiums for next year. I almost had a stroke. It's unbelievable the amount of money that the insurance industry is charging us, inflation-wise, more than last year, 2 years ago, let alone 5 years ago, and what they are banking. So if you guys are on Twitter, I'd love to hear your stories and feedback on that, because I think there's actually a real issue here. It's not fair to people who need insurance.
I mean,
it's
ridiculous. There's a reason, and I said this on the call this morning. 1, 2, 3. Because you can be angry about it. Clearly, Bloom, when he says he almost had a stroke, is more than angry about it. He's on tilt a bit there. Or you can own it, right? So, this is an ETF. This is another one. And if you're a big, captain stock picker, there's this company called BRK, Berkshire, A or B or whatever you want to buy. The only way to protect against inflation and become less pissed off about the government saying there's no inflation is what? To own it. Now, that's the problem, right? In a K-shaped economy, Michael, where 2/3 of Americans don't have any money left, I get to own inflation, and they get to eat it. Now, I'm not proud of that. I'm just smart enough or not dumb enough not to do that. No?
Yep.
I mean, to just sit there and eat it? I think that, this has actually been, next to India, has been the longest standing position in the portfolio solutions. In my family office long only, these two positions are the longest standing next to India. These things have been bulletproof. So there are a lot of big ideas out there that you don't have to have a big idea about. You just have to listen to the market tell you what's going on. And then one day, a German guy tells a Canadian guy in an audience after showing you some cool Hedgeye live opportunities that this is a big problem. Well, no shit. That's why it goes up every day. Okay? So did you see, Warren Buffett's quarter was amazing.
Yeah.
And he's just taking all that money. And he's like, I'm not buying stocks with it. I'm not going to go buy Snowflake at 178 times EBITDA.
Building a pile.
Yeah, it's great. It's great. There's a good country song on that.
All right. FX. So I put on a Japanese yen position. That worked okay. Actually sold it the other day.
Short yen?
Yep. But I also put on a short euro position. That hasn't really worked for me yet. Now, again, I'm not whipping it around the way I used to. But it's gone against me, probably a couple percentage points. So where are we on the euro?
This one, yesterday it finally rolled over, and the euro finally this morning is a little lower. But the risk range on that, people might be using FXE. It's like 99 and a quarter to 100 spot 30. And to your point, like when it went to 100, and it's 100 spot 30 near the top end of the range, that's where you'd be like, hey, that's not working. That's where you add to the short, right? Because then when it gets down towards the low end of the range, you'd be covering some. It's a relatively tight risk range, so it's not exciting or anything like that. If and when currency markets become exciting, it's likely because we're in a quad 4 depression and the dollar is going vertical, right? The dollar's just been steadily rising, 7 for the last 8 weeks. So currency trading currently, I'd consider it boring, and you have to have some patience with it.
Is there any particular currency pair that you like?
Well, the Canadian dollar has been a great short. If you look at the risk range product, we did a couple things. I like to look at it's like watching a hockey team, right? Or your firm. At the firm, let's say that around numbers, I have 100 people. You're like, okay, is this, when I'm actually in this part of the review, which Michael knows, where you're evaluating all your players. Like what kind of job is that person doing, it's relative to themselves and relative to the team, because you only have so much resources, right? So, but you want to evaluate it all. So when I look at my currency, signals, I evaluate it all. I wouldn't just pick one. Like Michael will pick one if he has one position, but I, as the producer of this content and of the process, have to look at the entirety of the signal. So when I think about it, I was like, okay, long US dollar index, 7 of the last weeks up, that's good. UUP's been good. It's not making me rich. It's preserving my capital, right, in a currency position. 2, the euro position's right near the top end of the range. We'll see if that works. The British pound stopped out of the long was a good move. And then the Canadian dollar short was probably the best one. So, and I didn't have enough of that on the short side, so nor did I talk about it enough. But the actual signal itself did its job. Those are the big ones that I focus on every day or I model every day.
All right.
What else you got? I got something.
Go ahead.
Okay, so we've been focused. Some of you may have gone to sleep while we talked about currencies, because you don't do currencies. If you're a free access person this week, all you do is stocks, right? You just want stocks. That's what you do, right? It's great. Now, do you know that the currency market, commodity market, and fixed income market really impact stocks? Maybe, maybe not, but it doesn't really matter to me if you don't, unless you want to be educated on that. That's our process, okay? Now, on the stocks, we still have the most accurate signaling process on that. Like, who told you Google broke a medium-term trade and trend before everybody on CNBC started saying, oh, I'm going to reduce my Google exposure yesterday? We did, right? So you get to watch this week. It's the 4th day of the week, so let's do it one more time. Our power users would have noticed the following this morning in what is now the Mag 4, okay? So that's, we entered the week, it was Mag 5, because we don't have, because of course we don't have Tesla in there. Tesla and Apple we didn't have in there, which has also saved our clients a lot of money. But now we're down to the Mag 4, okay? So a couple observations inside of this that you should have noted. Microsoft, which is one of the 4, this is what you should have noticed. This lower high, 413. That's in your risk range product. That's the 3rd day in a row, I think, or at least this week, 3 out of 4 days, where you're getting lower high in what's been one of our most bulletproof longs that everybody owns. That's not a bullish thing on the margin, right? Something that's signaling higher highs like Netflix is, right? So that's higher highs are more bullish than lower highs. So that's one thing. It doesn't mean it's not bullish. It means it's less bullish, okay? It's all about probability weighting and sizing accordingly to the higher probability bets, okay? Second thing I'd call out, which has been one of the better signals, is Meta. So on this one, we have a higher low at the low end of the range of 464. On the margin, this makes this one more bullish than Microsoft. It's got a higher low and a higher high. All right? As I said, higher highs are more bullish than higher lows. Then, of course, we have this one, which isn't in the Mag 4. We have this one called the Goog. Right? Google equals what? Lower low, 132 is the low end of the risk range, and it's inside of 141, which is trend. Okay? So again, when I get up in the morning and I go through all this, I do not listen to myself, give myself a soliloquy on it. I don't call an analyst and say, what do you think about it? Eventually on the call, I might address, like, okay, why is, maybe some of these things. But I know what I'm going to do with it no matter what the analyst tells me, okay? So I would encourage you to really, when you get up and, as soon as those risk ranges are published, study it deliberately and get back to where I started today's macro show. Notice the particular lower high, the particular higher low, the particular lower low. It's the particular that matters, not the valuation of things, the garrulous ranting about things. Almost nothing you hear on CNBC actually matters, other than to their advertisers, right? And that's how they get paid. So think it through, buy the book.
With that, we'll wrap it up. Wishing you guys all the very best on this very special day, February 29th. Have a great trading day out there today, and we'll see you back here tomorrow.
And good morning from the control room, everybody. Just a reminder that free all access week continues. And yes, to answer Keith's questions, risk ranges, I finally found it. Risk ranges are available for free this week, so check that out. For new folks, and even for non-new folks, I wanted to remind everybody to check out our education center. That's hedgeye.com/university. It's a whole bunch of great educational material in there, including that book that Keith's been waving about. That's his Bible of financial markets. He's not lying about that. If you scroll down in our education center to the Keith's reading list, we've got Keith's must-read process books. We've got 3 videos that Keith talks about those books and a whole list of other books. So a lot of people are asking about what Keith reads, what his most important reads are. Those are a few of them on there. So go to hedgeye.com/university for that. Have a good day out there.